With the coronavirus currently spreading across the globe in an incredible rate, the current financial and global situation around the world is in an absolute nosedive. And as horrible as the coronavirus has been, and as tragic as the situation is at the moment, and it is spreading and getting worse, it might be a time where we can find some financial benefit in an otherwise really tragic time. Now, this video is not going to be as upbeat as my normal videos because it really is a very somber affair, but I thought I could help use this time to hopefully open your eyes and enlighten you on some of the things that you can be thinking about that might turn this really tragic situation into a slightly more positive one for you. When things on the scale of the coronavirus do happen in the world reacts in really different ways. All over the globe, there are so many different factors being affected, and one of them is the economic sector. At the moment, schools are closing down, workplaces are closing down, sporting events like the Grand Prix and the NBA are being suspended or even cancelled. In Australia, we follow the AFL really closely. They've been talking about playing games in front of 0 people to be as safe as we possibly can. Countries are closing their borders. Airlines are closing down flights and not flying internationally. Hospitals are being built in a matter of days and weeks because at the moment, the world is in a really vulnerable place and we all are trying to band together to stop this virus at its core and stop it from spreading even further around the globe. And during all of this turmoil, unsurprisingly, the economic market and the financial sectors are taking a massive blow. And while this is such a tragic time, it also presents itself as an opportunity to us to invest in the share market and in other markets to make some financial gains from a situation that is otherwise terrible. Global economic crises like this are so uncommon and they come about really every 20 or 30 years, and there are only a few really notable ones in the last 100 years or so. And this presents an opportunity to us to invest in a collapsing share market, hopefully when it has completely collapsed, and then we can invest hoping to regenerate the economic market and cash in financially on that situation as well. Now, a quick disclaimer, I'm not a financial professional. I do not have the legal authority to give you this advice. These are just things that I've been thinking about and discussing with family and friends, and it's something that I want you guys to consider and think about. Do your own homework, do some research, speak to a professional if it's something you are considering, but I just wanted to give you some insight into how I've been thinking, and hopefully that can open your eyes as well. It may or it may not be in your best interest to capitalize on a collapsing market and hopefully get it near the bottom and grow as the economy restabilizes and regenerates. But always remember, the share market comes with inherent risks. The higher the reward, the higher the risk. So make sure that you do please speak to a professional and get the adequate advice and the appropriate advice to give you the best information possible. But please remember, at any moment, a share market can collapse, a company can go bust. There are so many factors, and it's not just the coronavirus that affects it. There are thousands and thousands of different variables, probably in the millions, that impact each company and the share market as a whole. Historically, after a great tragedy like the Great Depression, like the housing crisis, the market always tends to rebound. So it's very unlikely that now that the market has crashed, that it will stay that way forever. More than likely, the really big, really solid companies will find their way back to their feet and they will be worthwhile investing in. But still, that is not a guarantee. That is just what has happened historically. Now let's talk about picking the bottom of the market, because that's probably one of the things that everyone tries the hardest to do. We all want to buy shares on the day that a particular share price is at its absolute lowest. And the odds of that are so low. To catch it on the bottom day and sell it on the top day is almost an impossibility, and it probably never happens at all. So what our goal should be is to catch the market right as it starts to rebound. Don't try to predict the exact bottom of the market. Wait until you see a few days or a week worth of growth to start seeing that improvement, and then it's time to look at investing our money, because we can be relatively confident that the market is heading in the right direction. But until we start to see that consistent growth, we don't know when the market has hit the bottom. Time in the market is more important than timing the market. And while both elements are super important, you'd rather be in the market for a long time than catch the very very bottom and sell at the very, very top. Getting it close to the bottom is almost as good as getting it at the very bottom, and if you end up waiting and waiting to hit the very bottom, you might miss out on the opportunity entirely and see it start to rebound and never jump in. And the same goes for selling shares. We'll never sell it on the top day for each company, but if we get close and we see a point where we think that's pretty high, I'm happy with the return of my investment right now, that's a really good time to sell, rather than waiting for the very top, because you might find it starts going the other way and you're always waiting for it to get to the top when really you missed the top. It was just lower than you expected. Right now, it's kind of like the market is on a Black Friday or a Boxing Day special where it's 50% off, 40% off, 30% off, depending on what the company you're investing is. So what a great time to start really looking into the market and seeing if it's worthwhile jumping in when the market has collapsed. Because as we've talked about earlier, the market always historically recovers. Not every company, but on the whole, the market will generally recover. So if we can get in on the ground floor, that's a perfect time. We're currently on a discount. Let's capitalize on that. But again, no investment comes without risk. Just because the market's in a low place doesn't mean a particular share is going to go right back up to the top. It might suffer for many, many years or decades to come. It might never recover, even if you expect that it will recover. So again, make sure you are confident if you are going to go ahead with these trades, because while it could be the best time to capitalize and it's generational, it still is a huge risk. Another thing to consider is don't get too bogged down in the idea of making quick money. When the market's at its lowest, we don't know if it will rebound back to where it was in 1 month, 2 months, 1 year, 2 years, 15 years. There's no way to know. So if you're planning on investing for a month or two, that might not be a great strategy. So if you do want to invest, make sure that you think it would be a good investment for long term. If you're not confident in that share's long-term trajectory, then it's probably not a good investment for you to look into. These situations come so rarely. It is so uncommon to see a financial and economic collapse of this nature. It does happen, but it could be every 10, 20, 30, 40 years, and it could be decades before we see it again. So it could be a great time to capitalize. And if you do want to look into this further, please let me know down below, because I'd love to hear your thoughts. I'd love to hear what you think are the great risks, things that I might have overlooked, and other people down in the comment section or people watching this video. And also let me know the things that could be really positive about investing in shares and why you're considering it. All right, guys, thanks so much for joining me. I wanted to make this quick video for you because I feel like this is a time where we can really capitalize on our own money, even though it is such a tragic time with the coronavirus spreading the way that it is and the precautions that the world is taking. As per usual, this is general advice. This is just Dan-splained. This is me sharing my thoughts and the way I see the world with you guys. And it's not matter of fact, and I don't have the professional advice to give you, but I just want to enlighten you, open your eyes to things that you might not have been aware of before, and do with that what you will. And if it works to your advantage, great. And if it's just advice that you listen to and move on from, no problem. There's nothing wrong with that. I just want to give you guys these ideas. So if you enjoyed this video, please like down below. Please subscribe. There's so much more coming in the future. I'm loving doing all this with you guys. Oh, and PS, please be safe out there, guys. Make sure you're looking after yourself, look after your family, be really, really careful, and do the best you can to stay out of harm's way. Until next time, I'm Dan, and you've been Dan-splained. See ya!